we're going to go over used car market update. But initially, I'm going to hold this to the end. Why bucket management still matter, I should say. Been hearing a lot of, and it's been over a few years now, how bucket management is an old strategy and how to manage your inventory. And I'm going to go over the difference on where I agree and disagree. And so we're going to go over a used car market updates, and we're going to go over why bucket management still matters in this video. So let's talk about the market first, because it's real important to kind of understand why bucket management is still going to matter, only because of what's going to happen here in the market. So what I'm going to do is I'm going to share my screen. I'm going to give you some data points. So if you listen to this podcast, I encourage you to go Facebook, LinkedIn, YouTube, track down this video to look at these charts if you need to. But I'm going to go ahead and share my screen right now. And the first thing that we're going to look at is what I always refer to is this is Google Trends, and looking at used car active shoppers in the market. And we're also looking at the past 5 years because I want to give you kind of that pattern. Okay. So let's go back 2 years from now, because again, you go back COVID, 2021, 2022, it's kind of not fair. So we've had some kind of normalization in the market since 2023. Now, normalization, again, on this chart, it goes from 0 to 100. And so in a 5-year period, it's looking for the highest peak of used car activity. So, of course, March of 2021 was the tax season of COVID overhang, and that's the peak of the market. Okay. Let's just fast forward to like 2023 February, March tax season, 68. So, that gives you a good comparison. That's what is that? 32% less shoppers looking for used cars in 2023 than there was at that peak. Okay. So normalization of the market a little bit. So February hit that peak in 2023, but let's skip to usually a July, August, there is an uptick in activity. What I'm going to do is show you another graph of our dealer sales volume that will correlate with this. But you can see August, July, June, July, and August, there was this little uptick in summer sales events, summer sales-a-thons. Let's get stuff done before kids go back to school and the winter hits. And then from August, let's look at where September 3rd, okay? The shopper index was at 57. And after that July, August uptick, that volume of used car shoppers just went down all the way through November and December. And then again, it didn't peak back up to February and March. And if you remember, 2024 was kind of light. So 2 years ago, we were at a 57, and then it dropped down to 46. Okay. And then February, March picks up. So let's look at last year. Okay. August, it peaked at 58. Again, the previous August, that was 63. So that's a 5% drop year over year in shopper index. But let's look at where we're at come this September, 51. So again, we go from 57 to 51, and business has been lighter, 6% less. Now let's fast forward to now. We hit this July peak, and then we're down at a 50. So that's 1%. So it's similar to last year. And the reason why I want to say that's why that's important, 51 and 50, is look what happened all the way through October and November. Okay, that's going to be 30 and 60 days from now, it dropped 8%. So is it going to drop 8% and be down at 42 by October and November? I would say yes, because that's what happened the last 3 years, even going back to 2022. Okay. So last 2 years it's done that. And the last 3 years it's done that. I mean, look at 2022, August 63, and by September 18th, 54. And by November, 56 and 49 and so forth. So it's a yearly trend. Now, you're going to be seasonal. Maybe the South and the Florida snowbirds start picking up as people move from New York down to Florida, and they might need cars and stuff. I get all that. Maybe it shuts down sooner in the North as weather hits. But so think about that. Well, that's our trend. It's going to slow down. And the reason why I show you this, because that's going to impact headlines like this. Used car vehicle values report slightly increased. And they're talking about, vehicle valuations, residual value forecast, released and retention index, the seasonal index increased 0.01% and remained flat. So it's basically flat and barely up. from August of 2025, which is 0.3% same time last year. So here we are, we got less shopper activity, but the volume is up. But again, the residuals and stuff like that. So let's break that down. So one of the areas that we look at is going to be wholesale, and we look at what wholesale and retail market data is doing. Okay. And so let's go back to this shopper index. Okay. And that's that red line. And we went back to 2023 in July and August. And remember, when that July, August shopper index hit, our dealers' 2-week volume increased. So 2023 dealers were selling almost 100% of their inventory. That 49% represents what they sold in the last 2 weeks. So if they're selling 49% in 2 weeks, that means they're on pace to sell 100% of their inventory. But look what happened by September 19th, 2 years ago. 50% dropped to 42%, okay? Or 49 dropped to 42. That's a 7% drop, but that's a 2-week window. That means for a month, that was a 14% drop for the month in volume, okay? 7% drop in 2 weeks means a 14% drop in a 4-week window. And again, it continued to drop down through December. That was 2 years ago. Let's look at last year. That volume peaked in July 30th, 100% sale rate, and even stayed at or a little above, right at about 100% sale rates, 48, which is, selling 96% of their inventory all the way to end of August. And then by September 17th, it's 41%. But remember, we're looking at 2-week sales. So September 17th, if you take 14 days away, that means that data started on September 3rd to September 17th. Okay, we had a 9% drop. Okay, times 2. That is a 18% drop in volume. And it stayed down there through January and February. So look at where our dealers' volume is right now. Okay, 46%. Again, comparably to this time last year, 45, 46%. Same. So are we going to get that same drop off? And if we do, what's it going to look like, right? So here's why I like that wholesaler index values up. If you look, the other two lines I'm giving you, blue, the same blue, red and green. Red is shopper index. Shoppers counts up, volume's up. Shopper count goes down, volume goes down. So as our dealers' volume went up, as the shopper activity went up, and it's starting to drop off now as shopper activity is dropping off. Okay, same chart, red and green here, but the two different numbers are black, average retail age. We were selling more cars as people were shopping for more cars. So the average age of retail dropped from 42% down to 38 days. So that as a headline would look good. Don't get tied up in that. It's going to say, wow, average age of retail dropped from 42 to 38. Things are moving. Oh, and volumes are up. So it's going to give you a false positive. You're going to feel very positive. Oh, the average age of cars are going down. We're selling more. The volumes are going up. Let's keep going. Well, I'm warning you, the next 30, 40, 50, 60 days is going to be a slowdown. Okay, for anybody new in the market. Anybody who's been around for a while understands this. I'm just backing it up with data instead of gut. Now, wholesaling stuff's up because as we're selling more cars, we had to replace them. So we go to the lane, and the lane wholesale percentage goes from 57% to 64% selling at the lane. So more cars are selling at the lane, probably for a little more money because we got to replace what we sold. But then here comes the slowdown. And that's where margin compression is going to happen. You paid up for these cars, and then in the next 30 days, you're going to have to keep dropping your prices. And you're seeing it right now in, so I'm going to stop sharing my screen right now. You're seeing that right now where you priced the car at 98% last week, and now you're at 100%. The market's moved 2% because cars are starting to age. We're going to see that black line tick back up. And if I was going to start the chart up, I'll show you how it ticked back up last year. It dropped off last year, and then it shot back up. Here, I'm going to show that again just so you all know. Let's share this screen right here. Let's look at that last year, 2024, July. Average age of cars on retail car, 53, and then it dropped all the way down through September 24th to 42 days. So it dropped 11 days. But guess what happened right here? By 10/22, it creeped back up to 57. So between 10/1 And 1022, that average age crept back up. Okay. Guys probably wholesaled a bunch of cars, moved them off online, and then they came back to the market and they sat again till January, and we sold out of those cars, and it's going to build back up again. So, I'm going to stop sharing my screen. So, don't get tied up in, man, average age of retail's down, wholesale values are up. It's going to go south in the next 30 to 45 days, and it already has been on the retail end. As there's less shoppers, we got to get more competitive, get them our store. That's where bucket management comes into place. Now, I just saw a video from a major inventory management tool company, and Beato's talked about it a long time too. If you heard Dale talk about ripe bananas and brown bananas, right, and the shelf life of a vehicle, and Tommy Gibbs talked about it for years, right? Each vehicle should have a different shelf life. This car needs to have a 20-day shelf life, and this car can have a 60-day shelf life. If I got the right car, I can wait for the right customer. But that 60-day shelf life car is going to be very selective, and it depends on what kind of data you're looking at. So my point about bucket management is when you're managing a car, that shelf life, ripe banana, brown banana, makes sense. Okay. No argument at all. Okay. Bronze, silver, platinum, however you want to rank a particular car. One car will have the right assets, either the way you own it, the right equipment, the right miles, the right color, everything combined. That car has a different shelf life than the rental rocket with high miles on it. Okay. So that is true when you're talking about an individual car. Market, who's buying, is wholesale up or down? Do I own it good? Is there people looking for it? Is it hard to come by? There's not any in the 500-mile radius, and it's a high demand car. All that matters when you manage a car. Okay. Our company Lotpop and Lot Walk focuses on managing your lot as a whole. Okay. So bucket management does matter, because I don't care if it's that ripest vehicle, platinum, green banana kind of car that you can hold out on. It doesn't matter on daily holding cost, $50 a day, let's just say. And if you hold on to that car for 100 days, do the math, right? That's $5,000 of sitting on that car for 100 days is a true number. Then also, we're back to depreciating assets. That car is still depreciating. Maybe not as much as that rental rocket with high miles, or that late model competing with new car incentives, but that car is depreciating every day also on top of that holding cost. So bucket management still matters when you're managing your lot. You cannot have 30, 40% of your inventory at 45 days or older. You shouldn't have it over 30 days or older. Okay. So as an inventory as a whole, so I'm putting this message out here, because don't get tied up in, well, age doesn't matter anymore, so I'm not managing my age buckets. Well, you're going to be welcome to an aging problem coming in September and October and November when it's slowed down, and good luck in that market, the way things are going to go. Okay. So I know it's going to go. So if you're not managing your buckets, once you realize, managing your buckets would be, let's say 15-day increments, 0 to 15, 16 to 30, 31 to 45, right? Okay. 46 to 60, 60 plus. Okay. If my 31 to 45 age bucket has 20 units in it, and if I look at my last 2 weeks of sale rate, I've only sold 5 out of that same bucket that has 20. Well, if I've sold 5 in 2 weeks, that puts me on pace to only sell 10 this month out of a bucket that has 20. You're 10 units behind that age bucket. You need to dig into those 20 units. Now from there, once you look at those 20, know that's a problem. Once you recognize those 20 units, then you pick out ripe banana and brown banana, or bad milk, good milk, or however you want to put it, platinum, brown, whatever. So this car, out of these 20, these 3 I can hold off on because they're the right car at the right mileage. We're getting activity. But these other 17, what are we doing about it? Okay. And again, I like looking at more of your data. Like, hey, if you're heavy in trucks, you're heavy in 2020s, you're heavy in $40,000 cars. So you have a 2020 large pickup truck at 40 grand. Oh, and you don't have any leads, and it's not converting online, and it's miley, and it's a bench seat, right? Right. So you got to have some automotive intelligence, AI, have some automotive intelligence. It's a wrong car. It's got bench seat. It's got this. It's not leads. We don't have activity. We're heavy in the year, heavy in a segment on my lot. Once I isolate that truck and go, shit, this car has a lot going against it. Now go look at market data, auction data, and so forth. Now go look at the leads that you may or may not have on it and figure out, well, okay, we got 3 leads, but we haven't followed up with them enough. So let's do that first before we pull the price trigger. Okay. So my point being is, The used car market trends, obviously, we're going into the winter months. You got to be prepared. Don't worry that 10-day-old car. You better worry about, because that's going to be your 60-day-old car come October and November when things are really slow. Okay, so worry about that 10-day-old car. And probably be 1 or 2% more aggressive than you feel like you need to be right now. If you feel like you can sell at 98% off your lot, well, you probably have to be at 96% going forward to keep that momentum going. So be about a 1 or 2% more aggressive. If not, you're going to be 1 or 2 weeks behind on pricing, meaning you got a 30-day-old car, you should probably be close to be, let's say, 95% on this car. But based on the pricing strategy, you're going to be at 97%, right? Because you've been at 99 and 100, or 199, 98. Now it's 30 days old. You're at 97 because you were at 96 and moved to 97. So to go back to 95 by now, you should be at 95. You got to drop another 500, 1,000. You're a week behind. So you should have been at this price a week ago. Anyways, if you like some help navigating through all this, reach out, go to lotpop.com. Lotwalk.com is Lotwalk is our software. You can go to lotwalk.com also. Love to show you how we combine inventory and lead management into one tool so we can manage leads based on my situation. If I got a truck problem, it's called truck leads. All that's put into one system for you, so then you can manage your lot first and then use the inventory management tools to figure out the cars. Okay, what car is right or wrong? Okay, so hope this is helpful. See you next time.